Good morning, everyone. It is Wednesday morning, 7 o'clock a.m. Eastern Time. Going to run through the morning charts here. We've got a little bit of volatility in pre-market trading. We had a move down last night in the equities market because we saw the U.S. dollar actually have a nice breakout to the upside, and that's also the move up in the U.S. dollar is also putting some pressure on commodities this morning. So just taking a quick look at the U.S. dollar index. Make a long story short, you can see here the last about 12 hours, this is a 4-hour chart. Yeah, so the last 12 hours here, we've seen the U.S. dollar index make a move to the upside, and yesterday we saw the equities market close right here, and of course that strength in the dollar has sent equities moving lower. Now this breakout to the upside, we're getting close to reaching the target I originally pointed to about a month ago. Not quite. Yeah, about a month ago in total. I pointed out we'd probably go to 79 to the 79.50 area, and that was a simple measured move from this low to this high, and then we had this consolidation. And you take that measured move, you flip it to the upside, and it pointed out that we'd reach somewhere up here. And that's the market always has a way of dragging things out, trying to shake people out as it works its way to relatively basic measured moves. You can see how it takes longer than you anticipate. It'll have some shakeouts in there, and anyways, we are starting to get there now, which is this previous high over here. So in the next few trading sessions we could see, or even today, we might actually see the market maybe put in a bottom here with a little bit of a washout sell-off, and we're going to reanalyze the markets from there. But overall, we've been in a nice short position. We've been riding this trend down, and this morning we're having a little bit of a bounce, but we're still trading actually down on the session. We're going to have a gap down at this point still overall, and we're just going to continue to ride this downtrend until we finally get bucked off of it. Now, just take a quick look at the crude oil chart and what commodities are doing. You can see the past few hours of crude oil trading, we've actually seen crude oil start to head lower. It's picking up some speed now, and it was starting to unfold what I was pointing out a couple days ago. We had this kind of falling wedge here. Usually a falling wedge, once you get this kind of blow off top that I pointed out, you get this falling wedge, usually you get some type of bounce, which we started to get that bounce. And the question is, I was wondering if we were actually going to get some type of bearish flag kind of moving up, which we started to get yesterday. This morning we're starting to break out of it. The question is, are we going to find some support here and actually have more of a bearish flag kind of or a trading type of wedge somewhere down in here? So we'll have to see how that kind of plays out. Overall, crude oil looks as though it's starting to roll over. If I just clear the chart and draw a simple trend line here, you can see we had that breakdown. We had a test in overnight trading, something that you really can't catch with an ETF because you can't trade 24/7. But overall, it broke down, kind of tried to hold that support trend line, was stuck underneath it, and then it's given way. And now it's continuing to work its way lower. Now I do have a target on crude oil for 92 to the 90 area. We'll see if we get that kind of move down. Just looking at this simple measured move here, we've had a move down. We've got a bear flag, a mini bear flag. And you can see we've had about a 1, 2, 3, let me just see here. 1, 2, 3, $4 move to the downside. If you take that $4 move from the low of this flag here, we go 1, 2, 3, 4, which puts us right smack in the middle of my targets. And so we could see crude oil come down to this level here around the 91, right in the middle between my 90 and 92 level I pointed out about a week and change ago. So we'll see how that kind of plays out. More or less, the US dollar is in a pretty strong uptrend that should continue to put pressure on stocks and commodities. But if we look at the charts of the SP500, I do feel as though the market is getting a little overdone, and on the downside it's ready for some type of relief bounce. And the US dollar index doesn't have much farther to go before it runs into major resistance. And those two things combined, if they happen at the same time, which they should, we'll probably see a strong bounce in the equities market and a pullback in the US dollar index. So let's just take a quick look at gold and silver. Gold is trading down a little bit this morning. Had a bounce there yesterday, the past day and a half. This morning it's starting to pull back down. Would really like to see it continue to bleed off. What we're getting is we're starting to get these, we had a lower high here, and what we're getting is this kind of, I pointed this out several times ago, this is, hopefully we get another washout, and this pattern here is just simple bounces, and they pick up speed, and we see a new low put in, and from there we actually could probably pick a pretty good bottom in the market for a substantial bounce that could come back up to the 1740 area. So I'd really like to see one more bleed off in the gold market, and kind of go from there. That's the same with silver. If we take a look at the silver chart, silver doesn't look identical, but more or less the process is about the same. It is making lows. It's made a new low, had a little bit of a short squeeze there and kind of broke a previous high, and saw a little bit of a move up, but it's giving back those gains pretty quickly, and I wouldn't be surprised if we see another dip down to the probably down to these lows here if the US dollar will continue to hold up. So you could see a dip down to around the 29 area, and then we might actually have a potential good bottom for gold and silver. Taking a look at bonds this morning. Bonds, we've been seeing money slowly move into bonds, and they've been extending up and up, and they're about to reach these previous highs, which I pointed out a couple days ago also, that we're likely going to see these highs probably get pierced. Once we see a little lift into these prices, we'll probably see it get stepped on again, which I do think this stock market is about to have a strong bounce. And when you see a bounce in the stock market, usually money comes out of bonds and goes into stocks. So if I was to just draw this in and just put a couple of these just these pivot highs here, usually you want to see pivot highs broken. So what I'm looking for is hopefully we see this price continue to hook up, pierce those highs by a little bit. Everybody will be piling into bonds, and the stock market will go into a gap down and sell off, which could happen today or Friday morning. And then we'll see bonds actually pull back fairly sharply, just like what we saw back in these declines, and that'll be actually a very strong bounce in the stock market. We could go into a holiday rally. So that's kind of where we stand right now. If we take a quick look at the I'm just going to pull up the chart I did last night in my report. It's kind of tough to see, it's a small chart, but make a long story short, you can see when you get these pullbacks in the SP500, you usually see a spike in panic selling, which is this green indicator in the middle of the chart. And when it jumps over a certain level, over 20, usually I'm looking for the stock market to put in a bottom. And what the 20 means is more or less there's 20 sellers to every one buyer. And that means that the majority of people are obviously selling their shares, and they're in a panic to get out. So when you see a big move to the downside and you see panic selling, usually you've only got a day or two before the market bottoms, and then you'll get a pretty substantial bounce. So if we also combine the volatility index below it, it's kind of tough to tell on this chart, but I put angles on them, which kind of helps a little bit on these arrows. More or less you'll see a drop in the S&P, you'll see panic selling kick in, and then it's actually the following day is usually when you see the VIX jump up. And that it actually, once you see the jump in the VIX of about 15% or more, then you should see the stock market put in a bottom. Now, what we're seeing right now is we've got this nice move down in the stock market. We start to see a little bit of panic coming into the market, but we haven't seen a huge spike over this 20 level here. So with any luck, we might get a washout panic selling today, Wednesday, and see it jump way up in value, and then we'll see the VIX also jump up. But really, the VIX has not budged in this this substantial pullback that we've had, and that just goes to show investors actually aren't that scared yet. And what that tells me, if we're getting a pretty strong pullback and investors aren't in a panic to buy put options, protection for the downside, then obviously we've probably got a sharp drop to come, because we need to scare the heck out of those people and get them out of the market before it'll actually bottom. So what I'm looking for is a sharp pullback. We'll see the panic finally pick up, and then after the general public sees a huge crash in the market, they read it, see it on the news at night, read it in the morning before the market opens the next day, they all go into kind of panic mode and they buy put options expecting to make money on a falling market, and that's when you see the VIX actually jump up in value. And when everybody piles out the following day, which you can see here, you get the panic, and then the following day you see the actual low set. That's when we'll be looking to either take our short off the table and or go long at the same time and try and catch the bounce. So that's kind of how I'm looking at those charts and what this last night's report kind of was all about. Now if we just take a quick look at the SP500 SPY ETF, this is a 10-minute chart going back a few trading sessions. Just zoom in a bit, you can see all the trading sessions. So here's the past about 10 or so trading sessions, and we had that big gap down. We got this big gap window we have yet to fill, more or less. I'm anticipating a gap fill. When the market does reverse, we're going to see it scream up and fill that gap, I'm sure. We've got our protective stop set just above these previous highs here, so that if the market starts to go up and starts to go into that gap window, we get taken out, lock in our gains, and let the market rally to the upside. This morning we're seeing the SP500 is trading, came all the way down to around this, it's trading around the 18, but it actually went all the way down to the 17, about 50 area. So we've got another gap down so far this morning. And the fact that we're picking up speed and having gaps is a sign that volatility is picking up, and we're likely going to see probably a bottom in the market very soon. But we're going to stick with the overall trend of the market and just continue to hold our position. We've already taken gains on it a long time ago, so we're not in a panic to get out and lock in money. We've already locked in money, and we do have a protective stop in the money, so that no matter what happens, we should be pocketing some good coin. But overall, we're just going to let the market do its thing, work its way lower and lower, and every time we get a big gap down and some price action, some pivot highs, we'll move our protective stops down until eventually we just kind of choke the trade out and get out at the best possible price without jumping out early just because we want to lock in gains, which can actually hurt your performance in the long run. So looking at the futures chart of the SP500, here you've got yesterday's price action. I'm going to zoom in a little bit more here. Here is the last two trading sessions, the 24-hour clock. So again, this high volume session here, that was Monday. This here was yesterday, Tuesday. And in overnight trading, we saw the market trade sideways for a bit, and then kind of all hell broke loose, and we saw the market just kind of crash. Saw almost a 2%, 1.5% drop in the S&P 500, very sharply on some rising volume in overnight trading. This kind of volume here doesn't look like much, but for this time of night, it's actually a ton of volume, and that's one of the reasons why we got a huge move down. There's a lot of people exiting equities and futures. Anyways, this morning we've seen more or less it start to form a little bit of a base, and it's had a bounce, and it's becoming choppy here. The question is, where is it going to head in by 9:30, and what's it going to do today? So right now we've got our protective stops set more or less at about 12:01, right up here. If we do get a continued another breakdown today, I'll be moving our stops just above here to lock in more gains around probably the 1180 area. But we'll just play that by ear. Right now we're just letting the market work itself out and continue lower, and just go from there. Anyways, that's it for now, and I'll talk to you in a bit. Bye bye.